Hashtag Boondox Trader Market Insights for Monday, July 27th, 2026. Good morning, traders. This is the Boondox Trader Market Insights Daily Briefing, your edge before the opening bell. I am your host from the Boondox Trader Desk. Today we are covering global markets, the Iran conflict fallout and energy security, the AI data center credit bubble, the real story behind oil, and the Strategic Petroleum Reserve, crypto, and meme coin action, the semiconductor crossroads including the first NVIDIA Vera Rubin deployment, overall market breadth, a special look at the Moomoo trading platform, and we wrap with the Boondox Trade of the Day bonus. Let's get into it. Hashtag global economy and geopolitics. The dominant story of the summer has been the Iran-United States conflict around the Strait of Hormuz. That single waterway moves roughly 20% of the world's oil shipments. For months, the risk of disruption kept a premium in oil prices and elevated volatility across equities, bonds, and crypto. This weekend, the United States and Iran agreed to pause strikes. Brent crude responded by dropping roughly 7%, and risk assets caught a relief bid. But traders should not confuse a pause with a resolution. Any renewed escalation would quickly revive the oil risk premium and could force the Federal Reserve into a difficult spot if energy prices feed back into inflation expectations. The global economy is still absorbing aftershocks, higher shipping insurance, disrupted air routes, and nervous central banks across Europe and Asia. A sustained calm would help the Fed keep policy flexible. A flare-up would tighten financial conditions fast. Goldman Sachs research economists continue to expect sturdy global growth of 2.8% in 2026, above the broader consensus of 2.5%. Their view is that the United States is likely to outperform substantially, driven by reduced tariff drag, tax cuts, and easier financial conditions. Remember, markets discount the future. What makes headlines today is often something the market has been anticipating for weeks. Great traders follow trends. They do not try to command them. Hashtag deep dive, energy security and the Strait of Hormuz. Now let us go deeper on the oil story because this is where a lot of traders are missing the bigger picture. The Strait of Hormuz is the most important oil choke point in the world. Roughly 21% of global petroleum liquids pass through it every day. When hostilities flare, the market immediately prices in the risk that tankers could be targeted, delayed, or rerouted around Africa. That adds days to transit times, raises insurance costs, and puts upward pressure on Brent and West Texas Intermediate crude. But it is not just Hormuz. The Red Sea route, which feeds the Suez Canal, has been on and off lockdown for much of the past 18 months. Shipping giants have diverted vessels around the Cape of Good Hope, adding roughly 10,000 nautical miles and 2 to 3 weeks to voyages. That diversion burns extra fuel, tightens tanker supply, and eventually feeds into refined product prices at the pump. Even when headline oil prices fall, the cost of moving oil can stay elevated. The other side of the story is the Strategic Petroleum Reserve. The SPR was created in 1975 after the 1973 oil embargo and has a total storage capacity of 727 million barrels, which is also its all-time high fill level. Today it holds only around 325 million barrels, or about 45% of capacity. That puts it at its lowest level since 1983. The drawdown accelerated during the 4-month U.S.-Iran conflict, when the government released barrels to offset supply disruptions. Think about that. The United States sold down its emergency oil cushion while geopolitical risk in the Middle East was rising. Now that the immediate conflict has paused, oil is cheaper, but the reserve is still depleted. If another supply shock hits, the U.S. has far less firepower to manage prices. A refill program would itself be a source of new demand, potentially putting a floor under crude for years. For traders, the energy trade is not just about the direction of oil. It is about volatility, shipping, refining margins, and policy risk. Watch Brent crude around the $90 level, the weekly EIA inventory report, and any SPR refill chatter out of Washington. Energy ETFs like XLE and OH, and oil services names, can move on these themes even when the headline oil price is flat. Hashtag U.S. markets and the Federal Reserve. Turning to U.S. markets, the Federal Reserve begins its 2-day policy meeting tomorrow, with a decision due Wednesday. Futures pricing suggests markets expect a hold on rates, but the language around the statement will drive volatility later in the week. Earnings season is in full swing with megacap technology names reporting. Last week, Bitcoin ETFs posted their third straight week of inflows despite $465 million in late-week losses, with the bulk of activity concentrated in BlackRock's IBIT product. That tells you institutional appetite for crypto exposure remains even when prices pull back. On the equity side, watch whether earnings beats are being bought or sold into. That tone will set the stage for the next several sessions. Hashtag Article 1. AI data center buildouts and the credit bubble. The hyperscaler AI data center buildout is facing mounting return on investment concerns. Capital expenditure is exceeding $700 billion in fiscal year 2026. Bloomberg New Energy Finance puts the largest data center firm's capex at nearly $750 billion, with IT capacity under construction topping 23 gigawatts. That is a massive amount of power and capital being deployed. Here is why this matters to traders. Multiple enterprise surveys report that as many as 95% of corporate AI projects deliver no measurable ROI. The build-out is being funded by surging debt and equity issuance. If revenue per GPU does not meet expectations, capex budgets could be slashed quickly. Bulls argue absorption rates show no signs of overbuilding in the United States. Bears say this looks like a credit-fueled infrastructure bubble that could pressure lenders, REITs, utilities, and semiconductor names if demand disappoints. As a credit spread trader, watch this theme because it can create volatility in XLK, SMH, real estate, and utility sectors feeding the data centers. Hashtag Article 2, Crypto and Meme Coins. Bitcoin is back above $64,900, up about 0.8%, as the United States and Iran hold fire and oil drops roughly 5%. Ether is outperforming Bitcoin, up about 3.3%, near $1,947. Some analysts read that as a hint that an altcoin rally could follow Bitcoin's lead. Bitcoin options traders are dropping hedges going into the Federal Reserve meeting. The put-call ratio has fallen to about 0.52 from 0.76 in late June, and one-week downside protection has collapsed in price. That positioning suggests the options market is looking for a quiet week, but a surprise Fed tone could force traders to re-hedge quickly. On the meme coin side, Shiba Inu, ticker SHIB, is the standout mover, surging 36% to about $0.00057. The rally added roughly $1 billion to its market value in a single day, with no major announcement behind it. Volume is being led by South Korean trading venues, driven by regional retail speculation, thin liquidity, and a technical breakout. Pump is also moving, up over 18%. On the downside, Bitmart announced it will shut down after 9 years, and its BMX token has crashed 58%. That is a reminder that exchange risk is real in crypto, even for long-running platforms. Hashtag Article 3, Semiconductor Crossroads and Vera Rubin. The semiconductor market has significantly outperformed the broader market in 2026, but July is bringing a pullback. The VanEck Semiconductor ETF, ticker SMH, dropped 5% in a single session during the quarter, and the sector lost over $1 trillion in market value in under 2 months. Micron gave back 30% in 3 weeks, CoreWeave nearly halved, and NVIDIA alone shed roughly $1 trillion in market value. Those are not normal corrections for a healthy sector. The bulls argue this is healthy consolidation. Big tech remains aggressively invested in AI, fueling demand for chips, processors, chip-making equipment, and high-bandwidth memory. Micron reported fiscal third quarter revenues of $41.5 billion, up 74% sequentially, helped by HBM chips that manage complex AI workloads. NVIDIA still holds an estimated 70 to 80% market share in AI GPUs, while AMD is emerging as a credible challenger with its MI300 series. The $1.3 trillion semiconductor supercycle thesis is still alive for the believers. At the same time, the world's first NVIDIA Vera Rubin deployment has gone live. Dell Technologies delivered the first operational Vera Rubin NVL72 server rack to CoreWeave. Vera Rubin is not just a faster GPU. It is an entirely new computing paradigm that integrates 7 distinct chips, 5 rack-scale systems, and a supercomputer architecture built for agentic AI workloads. Performance estimates put a Vera Rubin pod at around 60 exaflops. The platform entered full production earlier this year and is now reaching early deployments ahead of broader availability in the second half of 2026. For traders, this shows the hardware build-out is still accelerating even as AI stock valuations are questioned. CoreWeave, Dell, and NVIDIA are direct beneficiaries, but data center REITs and power utilities will feel downstream demand. But the bear sea is a sector where valuations have run ahead of fundamentals. With enterprise AI projects failing to deliver ROI and data center capex exceeding $700 billion, the question is who ultimately pays for all those chips. If hyperscalers cut orders or push out deliveries, the richest multiples will reprice the hardest. Watch SMH, NVIDIA, AMD, MU, and ASML this week. ## Platform Spotlight, Moomoo Trading Tools. A quick word about the tools that power a lot of the analysis you hear on this show. The Moomoo platform gives direct access to real-time U.S. equity and options market data through its desktop and mobile apps, plus a powerful integration with TradingView. Moomoo just launched Moomoo Engine in July 2026. It bundles the platform's full trading toolkit into one connected system. The engine is split into 3 cores: the fundamental engine for research, the options engine for derivatives analysis, and the technical engine for charting. Each core includes 7 focus tools. That is a serious upgrade for anyone trading stocks and options daily. For options traders specifically, Moomoo offers 13 preset strategies: unusual options activity scanning, active 0 days to expiration options tracking, and a full options paper trading simulator. Some of the most useful analytics are the put wall and call wall visualization and the gamma flip indicator. The put wall and call wall show you where the largest option strikes are clustered. Those levels often act as magnets for price because dealers are hedging around them. When price approaches a call wall, upside can slow as dealers sell futures to hedge. When it approaches a put wall, downside can find a floor as dealers buy back hedges. The gamma flip is the level where dealer gamma exposure switches from positive to negative. Above the flip, volatility tends to dampen because dealers trade against the market. Below the flip, volatility can accelerate because dealers are forced to trade with the market. Knowing where that flip sits can keep you out of trouble on days when price is hovering near a key strike. Beyond options, Moomoo provides Level 2 data with up to 60 bid and ask price levels, advanced charting, and 0 contract fees for equity options. Moomoo also has an 8.1% APY cash sweep offer for new users and a promotion for up to $1,000 in NVIDIA stock when you open and fund an account. They recently celebrated a 6-year partnership with Nasdaq and expanded into prediction markets through a partnership with Kalshare. If you are serious about options, especially credit spreads, having direct market access instead of delayed retail data is a real edge. The paper trading feature is also valuable for testing strategies before committing real capital. ## Market Breadth and Index Snapshot. A quick look at overall market breadth and key indexes. The S&P 500, represented by SPY, is at $738.93, basically flat with a gain of 0.1%. The Dow Jones, DIA, is up about 0.5%, showing relative strength in old economy names. The Nasdaq 100, QQQ, is weaker, down 1.12%, as big cap tech faces pressure into earnings. The Russell 2000, IWM, is down about 0.33%, suggesting small caps are not leading. The total market ETFs, IDIT and VTI, are essentially flat. When the Dow outperforms while the Nasdaq lags, that is defensive rotation. Money is moving away from high multiple growth and toward dividend-paying industrials. For a credit spread trader, be more cautious on bull put spreads in tech and more open to bear call spreads if QQQ fails to reclaim key moving averages. Looking at options flow on Moomoo around 3 p.m. Eastern today, total options volume is near 54.5 million contracts, and the put-call ratio sits at 0.80. That is a neutral to slightly bearish reading. The top underlying by options volume is SPY at 12.47 million contracts, followed by QQQ at 7.92 million and NVIDIA at 4.39 million. SPY also leads open interest at nearly 18 million contracts, which tells you the S&P 500 is the primary vehicle for hedging and speculation right now. The highest implied volatility names today are CDSO at nearly 700%, REFR at 664%, CLGN at 631%, CBAT at 624%, and LPSN at 575%. Those are not names you sell credit spreads on unless you are comfortable with explosive moves. For SPY credit spreads, we want calm clean bid-ask, and a setup where the premium justifies the risk. If SPY implied volatility is spiking into the Fed, wait for it to settle or size down. The most active individual options contracts by volume include SPY zero-day to expiration puts and calls, plus longer-dated SPY hedges. That confirms traders are using SPY as the main event-driven instrument ahead of the federal EM, TLT, and QQQ also show up in the active lists, which points to cross-asset hedging, emerging markets, bonds, and tech. Checking the Moomoo stocks overview around the same time, the Dow Jones was up about 0.47%. The Nasdaq Composite was slightly down about 0.09%, and the S&P 500 was up 0.08%. The heat map shows semiconductors down 2.75% and another semiconductor block down 4.34%, while software infrastructure was up 2.51% and internet content up 2.19%. That is a clear rotation out of chip names and into software and internet services. On the gainers list, small caps DFNS was up over 180%, BY up 121%, and ENTX up 84%. On the losers side, CSS was down 80%, BIOD down 79%, and YYI down 73%. The heat list of most active names included NVIDIA down 4.46%, Micron down 3.15%, SanDisk down 11.33%, and SK Hynix down 6.05%. That confirms semiconductors are under distribution pressure. Looking at a broader global perspective, the Finviz geographic heat map shows how world markets closed or are trading today. It is a useful tool for seeing which regions are green and which are red at a glance. Right now, the cross-currents are obvious. U.S. tech is being repriced while old economy and software names are catching a bid, and energy is moving on geopolitical headlines. SPY finished last week near 738 after a weak Thursday and Friday. Friday volume was around 44 million shares on SPY, which is not capitulation but also not strong accumulation. We are in wait-and-see mode until the Federal Reserve speaks Wednesday and big tech reports. The tick and overall breadth will improve once real quotes flow after the 9:30 open, but the pre-market tone is neutral to defensive. Hashtag theme watch, space. A quick theme watch before we move to the trade bonus. On a Moomoo Space watch list this afternoon, the SDS was up 3.4%, RKLB up 3.89%, LUNR up 3.25%, and PL up 2.1%. Echo was down 1.12%, and SBCX was down 2.02%. The space sector has been volatile for years, but these names are increasingly tied to defense, satellite communications, and data infrastructure rather than pure speculation. Watchlist them if you trade thematic risk, but keep position sizes small. Hashtag Boondox Trade of the Day bonus. For today, we are watching SPY for a 1-point credit spread opportunity after the market opens at 9:30 Eastern. Our dedicated SPY scanner will run after the open when real options bid-ask quotes are available. Remember, every trade is paper only until proven profitable. Each trade is treated as its own $100 account, with a $10 hard stop and a 50% profit target. Hashtag Boondox Trader closing outlook. Before we wrap, here is how I am reading the tape as the Boondox Trader. We have a relief rally in oil, a Fed meeting midweek, and a tech sector that is being repriced into earnings. That combination says the market is not trending cleanly in either direction. It is digesting macro headlines and micro earnings at the same time. The most dangerous thing a trader can do today is force a directional bias. Credit spread traders should stay small and stay selective. The best opportunities usually appear after the first hour of trading, once real volatility and real bid-ask spreads settle in. Pre-market excitement is often fake liquidity. Wait for confirmation. If SPY gaps higher, be careful chasing bullish, put spreads into resistance. If it gaps lower, do not assume the trend will continue all day. Use defined risk trades, respect the $10 hard stop, and remember that not trading is also a position. Longer term, the themes to keep watching are the AI data center capex cycle, the SPR refill story, and whether Bitcoin can hold $65,000 through the Fed decision. If the Fed sounds dovish and oil stays calm, risk assets could extend this relief move. If the Fed pushes back on rate cut hopes, the Nasdaq could lead the next leg lower. Either way, the setup will be clearer by Thursday than it is today. That wraps up today's Boondox Trader Market Insights. Trade safe, manage risk, and we'll see you tomorrow.